Hey,
Hey everyone, Ryan Bolton here, local mortgage expert, ryanbolton.com, answering more questions that I found on the internet. Please post, comment, like, and subscribe if there's any questions you'd like to have answered, but let's just dive right in. I really enjoy doing these Q&A videos. If you have any comments or questions that you'd like me to hit, I'd love to answer those for you. So here's the first one. Can we withdraw our application for a home loan after it's been submitted, but before we receive the approval letter? Yes, you can withdraw your application at any time. It's not something where once you have an application in, you're stuck with that lender or that home or that contract or any of those types of things. It is just the information gathering stage. You can literally withdraw or cancel your application almost at any time. I mean, almost all the way to the very, very end. Even then, there's times you can withdraw. So there's a lot of protections out there for consumers that don't force you to stay with that lender, that loan, that application. I'm amazed at how many people don't withdraw even when they want to, thinking they can't. So short answer, absolutely. What does home equity loan cover? What does a home equity loan cover? So a home equity loan is like a Visa or any other line of credit. It's just tied to your home. So you can use that money to do almost whatever you want. I mean, legally, of course, it depends on what you do with the money, but there isn't anything that it doesn't cover. It just depends on the loan amount, what you're qualified for. So maybe there's some backstory on that question, but what does a home equity loan cover? Whatever you want it to. So, okay. What does home loan how does home loan pre-approval work? So we get an application, we review the basic numbers on that application, and based on the information that's submitted, we can issue a pre-approval letter. Now, a lot of times we will pull the credit report. If we can get the income and assets that are on the application verified, that just strengthens the pre-approval. But a lot of times it's just going off what's on the application. The underwriting stage is what verifies what's actually on the application, along with doing any inspections like appraisal, title work, home insurance, all those things kind of kick in a little bit after that. But a pre-approval is really the application. It has enough information on the application where we can have at least some sort of a surety that the loan would go through based on the information. Now, somebody could put you make $1 million a month. And if you don't, then that could change the approval. That's why it's always a pre-approval, not an official final conditioned approval. So that's the really thing. That application really helps us to know how strong your pre-approval will be. All right, let's go into some more stuff. Hope everyone's having a wonderful day. Let's see. How far back do mortgage lenders look at credit history? It's a history. We look at the whole thing. The score really helps us determine what's the most relevant. And then usually the last 12 months, they're going to look at more than just forever. But if there's a judgment on the credit that's 3 or 4 or 5 years old, we're still going to have to deal with it. So that's why it's a credit history, not just a credit year, a credit 2 years. They'll go back as far as the credit report will go. Now, many things start to drop off the credit report after 7 to 10 years, but I've seen things that last a lot longer than that. So it just depends on what it is. But really, if it's a mortgage late or something that's happened, they really want to look at the last 12 months probably the most, but they'll still look at the entire history. So they will look at the whole thing. Let's see. When my child inherits my house upon my demise, can they just assume the existing mortgage? Most likely no. They'll inherit the property. They'll most likely have to either refinance or sell the property to get rid of that debt, unless it's an FHA loan. FHA loans are assumable, but you want to put certain things in place to make sure they have power of attorney or something like that to be able to do it. But most loans are not assumable. So once somebody passes away, that loan would have to be dealt with by either selling the property or refinancing. So I see happens a lot of these situations. Let's say you've got 4 kids, 2 of them just want money out of the property, one of them doesn't really care, and there's always one that wants to keep the property or turn it into a rental or maybe move into it. So it's just a matter of kind of maybe outlining what would happen with either a living will or especially a trust. I highly, highly recommend getting a trust to make sure you outline what does happen with this and any other property that you have. But the short answer to this question, no, the loan doesn't just go to the heirs or stay with the property and whoever takes over the property gets to keep the loan. That loan would have to be dealt with either a refinance or selling the property to pay off that loan. Let's see. Who gets the property when a mortgage is foreclosed? So when it's first foreclosed, it'll go to a notice. You'll get notices to try to reinstate the loan or try to save the loan. There's federal and state laws that require waiting periods before it goes right to the courtyard steps. So a lot of it comes down to when they go to sell it, if the lender can get the money back out of the property. So if there's enough equity or the condition of the home is in okay condition, and if it basically the lender will say, okay, this is what's owed, this is what we're owed on the property. That's kind of the starting bid. And then that's if that bid hits, then that gets sold to the new buyer. A lot of cases, what would happen, especially in the past when there wasn't as much equity or during the '08 crisis, they would owe more on the home than what it was really able to sell for. So typically they would put it on foreclosure. They would be the highest bidder. So then the bank would then own the property because they would basically bid the amount that's owed. Nobody else would bid that high, and the lender would just retain the property. Then they would put it into their schedule of real estate and try to sell it later on down the road. A lot of times they would just sit and wait until the market recovered. But right now, we're not seeing a lot of foreclosures where there isn't enough equity where there's an investor or another buyer will come in and buy the property more than what's actually owed on it. In that case, any money that's above and beyond the debts will go back to the original owner. All right, let's see what else we got here. How many home equity loans can you have? Generally, there's not a lot of lenders that will go into third or fourth lien position. So you'll have typically a first mortgage, then a line of credit is the second mortgage. Any other loan would be then a third or a fourth lien against the property. The more liens that are past that, the more likely the lender doesn't get their money back in case of foreclosure. So if it's a third lien against the property, it's typically way worse terms. So most of the time, people will just refinance the second to increase the line of credit to just cover all of it. But there really isn't a limit on how many you're going to have. It just depends on the terms are going to get worse the more that you have. Or it really doesn't get worse if it's on multiple properties other than they're not your primary residence. So let's say you have 4 properties, 3 rentals, and 1 primary residence. You can get lines of credit on all the rental properties as long as it is a second lien position. So there really isn't a restriction on how many you have, but the more you have, especially on the same property, the terms are just going to get worse. So usually it's just better to try to raise the limit on the line of credit or refinance that to just get the extra room on it. But there really isn't a law that says you can only have one out at any particular time. How are we doing on time here? Oh, we're doing okay. We'll do a couple more here. Hope you're enjoying the videos. Please like and share. Comment on any questions that you have. Let's see. Can a person take a home loan and use the money for any purchase? So for any purpose, purpose. So basically, can you pull out cash and use it for any purpose? Yes, there's really not anything where the lender's going to require the money to go to a certain thing. Now, if you're paying off debts as part of the loan to qualify, then some of that money does need to be directed towards where the debts are going to be paid off to qualify. But the short answer, no, there isn't anything where the money, now, if it's obviously illegal or something where the money is derived from, that can be illegal. That can be some problems. But no, there really isn't any. It's not like income. It's not get tracked. It's not like you're going to get some form at the end of the year that says, well, you pulled out 50 grand, you're going to owe 50 grand in taxes or percentage of that on taxes. So no, you can take the money out of your home and do whatever you want to do with it in most cases, unless the loan requires that to qualify, you have to pay off a car or other debts. You're like consolidation to get the debt ratio to work. Then that usually gets handled at the title company or with the bank. They'll make sure that those bills get paid as part of qualifying. But no, there really isn't anything that says that the money can't be used for whatever, vacation, home improvements, paying off other debts, go put it on black in Vegas, whatever you want to do. All right, let's see what else we got. Let's see. Can someone else take a mortgage out on your behalf? No, in the sense that you would still have to be on the loan, sign the paperwork if the loan is in your name. Now, they can take it to benefit you, so they can do a mortgage to maybe buy your house and you rent the home back. I mean, that's a pretty short question, not know some of the backstory again, but can somebody else take out a mortgage on your behalf? No. Yes, kind of. That's a tricky one because I've had people where the husband or the dad buys a home for the kid. So the kid is benefiting from the mortgage, even though the dad is actually taking the mortgage. So on your behalf is kind of a broad statement. Now, can they do a mortgage and with your name and all those types of things now without you signing off on the loan and notarizing the documents and things like that? But Can somebody help you with a mortgage? Sure. Can somebody get a mortgage where you're the beneficiary as far as the cash that's coming out of it, or buying a home that you can rent, or buying a home for your kids, or buying a home for your parents? A lot of that stuff can absolutely happen. In fact, I've done a lot of those loans. All right, what else we got here? Check our time. Oh man, we're blowing through these ones today. All right. Let's see. If you have an FHA loan, is it better to sell or refinance the home before renting it out? So, generally, yes, because it's a primary residence when you're buying it. If you're trying to pull out cash or try to get rid of the mortgage insurance, or it's a better interest rate when it's your primary residence, then after that refinance is done, then you can look at doing it. Now, if you're selling the home, there's no reason to refinance it at that point. You're selling it. There's no reason to go through the cost of doing it, because it's interesting. Is it better to sell or refinance the home before renting it out? Well, if you're renting it out, if you're selling it, you don't own it anymore. So I don't know how that would play out. So if you're selling it, you don't rent it afterwards because you've sold it. So you don't own it anymore. But I've seen a lot of people, they need the money to buy another house. So they have to take some of the equity out of their primary residence to go buy another home with. So they'll refinance it first before they go through that process. So that is a better way to go, or get rid of the FHA mortgage insurance before, because once you're out of it and you turn it into a rental, rates and terms are going to be worse on that. Loan to value might not be as high. So you won't get as good at terms unless you refinance it before you move out or before you go buy another property. Let's see what else we got here. What is the difference between a home loan and a foreign home loan? There is loans for people that are resident aliens or have green cards or TIN number, ITIN numbers. So maybe that's what they mean by foreign home loan. Otherwise, I'm not sure. Never really heard of a foreign home loan, unless they're just borrow money from another country to buy a home here. So it's a home loan's a home loan. It's securing that property as collateral for the loan, regardless if it's foreign or domestic. It's still a loan where it basically says, if you don't make your payment, this is the collateral. That's what we take back to get our investment back. So home loans are home loans. Mortgages, kind of the same thing. It's just the collateral on the loan. That's really what they take back if you don't make your payment. All right. Let's see. Do I have to disclose all bank accounts to a mortgage lender? No, you don't have to disclose all of them. It is something where they do have to disclose where any earnest money is coming from, and any down payment is coming from, and any extra reserves. So it depends on where it is, but it's not like we need every statement of every account, every penny you have everywhere. But we do need to make sure we have enough to meet reserve requirements, which is usually anywhere between 1 to 6 months worth of the new payment, depending on credit score, depending on property type. There's a lot of different reasons why we need certain bank statements. But anything coming into the transaction, we definitely have to verify. And we usually have to go back at least 60 days. So that's why we always ask for 2 months worth of bank statements of any earnest money account or any account using down payment. Refinances, we don't need it quite as often, depending on what it is and depending on credit score, loan to value. So it'll really tell us, based on the risk, if having money in the bank will offset the risk. But we always are going to go back 60 days on anything that's coming into the transaction to make sure we verify where those funds come from. And what we're going to do is we're going to look for any large deposits that are non-payroll. So if all of a sudden 20 grand just hits that account, they're going to want to know where that money came from. Now, it could be a sell of something. It could be an inheritance. It could just be something. But if it's another loan somewhere, or unfortunately money laundering or something where illegal funds are hitting the account, this is one of the ways that anti-money laundering laws hit the mortgage industry, because a lot of money laundering has happened through buying and selling real estate. So they've created these laws to make sure, and guidelines to make sure, that we're not being involved in some money laundering scheme or something like that. But just keep that in mind. Or maybe I've had a lot of clients that'll just have a drawer at their house, or a little folder where they just start putting money into it to save up for a home. And then they get ready to save for a home, and they've got 5 grand sitting in this envelope. We can't use it. It's got to get deposited into the account. If it's straight cash, it gets really, really tough. So it's actually better to get that money into an account than it is to just let it sit under the mattress or sit in a drawer or something like that. And what I really recommend with that is, don't have it with your day-to-day checking and savings accounts. Have it with a completely different bank. Don't have the checkbook. Don't have the Visa card in your wallet or your purse. Have it so it's truly a separate account that you have to go down to get a cashier's check or cash out the money or something like that. It truly becomes savings at that point, instead of just logging into your phone and transferring it from checking to savings. make it just so there's one extra step, kind of one inconvenient step to get to that money, but don't just leave it at the house. Just try to get into some account. Now, there's a lot of online accounts you can get too that take time for you to withdraw from one account to the other. So that's another good way. It just gives you that one little layer of protection from you and your savings, so it doesn't get too easy to just transfer from you're inside your own account. So that's one of the tricks that I've used for years, is just separate myself from that savings just one extra step. That way it gives me time for buyer's remorse to kick in, or make sure it's truly emergency funds. And it just makes it so that money stays a little bit more protected. And you sometimes get better rates of return and stuff like that. Okay, how are we doing on time? Ooh, let's do a couple more. I always try to keep these about 20 minutes. So it looks like we're just about 15 or so. So, okay. What is the average cost of a mortgage with a partner? Well, that doesn't really change the mortgage payment. It just comes up to whatever agreement you have with the partner. If he's covering 50-50, or she or he is covering 10%, 50, that just becomes a arrangement with the partner. But the average cost of a mortgage with a partner depends on what you come up with. Like I've seen in my marriage, I kind of cover that. She covers the other things. Or I've seen other people where they do cut it 50-50, but it depends on what you mean by partner, whether that's a business partner or a relationship partner, a personal relationship partner. But it just comes up to whatever agreement that you have. But I do recommend trying to get it in writing. Just try to make sure it's not a handshake, because when things go wrong, that's one of the things that usually causes the biggest problems when stuff happens with that. But anyway, let's see. Let's see. What happens if a mortgage lender goes bankrupt? That's a really good question. A lot of times the servicing of that loan can be done by Fannie and Freddie, and they're kind of the investor on it. They just have a servicer that handles the day-to-day checking, or the payment collection, the escrow distribution. So a lot of times when they do go bankrupt, it gets assigned to another company. Either the loan gets sold or gets held into a survivorship type thing, to where they still collect payments, the notes still due. It usually just ends up getting transferred. The loan gets serviced by another lender. It doesn't mean that just because your lender went bankrupt that you just don't have a mortgage anymore. There's still that securitized loan that's pooled up with a lot of other loans to make sure that still gets done. So mortgages are really securitized. They become a security now. So your loan is pooled with a bunch of other loans, and if that lender just happens to go out of business, the loan will get sold to somebody else, or another mortgage company comes in and just buys that mortgage company and takes over all their assets and all their debts, that type of thing. All right, let's see if we can do one more. Ooh, maybe get one more in here. I hope you're enjoying these videos. I'm trying to post as many as I can. If you have topics, if you have something specific you want me to do more of a deep dive on, I've got other videos on the playlist. We also do a podcast every Tuesday. I drop a new podcast video where we go into a little deeper dive about things. But if you have a comment, concern, question, please post it and we'll answer it on another video. Let's do one more good one. Well, this is an easy one. Is it possible to get a jumbo loan with bad credit? Sure. Just depends on how bad the credit is, and the rates and terms are going to be worse. But there's a lender out there for just about every type of loan. It's just how much worse is the rates and terms going to be, and how much loan to value are they going to loan. Jumbo loan is anything over the conforming loan limit, which is going up for next year around $713,000. I remember when it was $417 for the longest time. The conforming loan limit was like $417. It's now just shows how much home prices have gone up around the whole nation. Now we're up to $713 for next year. So, and there's some areas that have high cost areas that actually go above that actually, like California, some of these areas actually go above that another tier before you even hit the jumbo loan category. But yes, you can get any mortgage with bad credit, depending on how bad the credit is, and the terms are just going to be worse. So the best thing I can tell you to do is just work on the credit. Take a little bit of time to know why the score is the way it is. Work on trying to get it repaired or disputed, or add some positive trade lines to see if you can get the score up a little bit. Can be a lot better than just taking the loan you have with your current credit. So that's the answer to that one. Let's do one more really quickly. Let's see. What is your opinion on repaying home loans taken by parents? As long as the payment's made so you don't lose the house. Depends on why they can't make the payments. Yeah, that's an interesting one. All right. Last one. Should I refinance my mortgage for cash? Depends. It depends on the rate and term that you're getting. It depends on where the cash is going. If it's just going into the back, if it's going for home improvements, paying off other debts where you're lowering your budget, That can make a lot of sense. It depends on what your rate is on your current loan before you go to the next one. That's why lines of credit, second mortgages are getting really popular right now, because everybody locked in such a low rate. They don't want to touch the first mortgage anymore, even though they may have a ton of equity. So should you refinance a loan for cash? It depends on where the cash is going. That's really what I would say. And I would say this as well. If you are saving your monthly payment, so let's say you're paying off a car, Visa, whatever other debts, combining a first and second, getting rid of mortgage insurance, all the reasons to refinance out there, make sure you do something with the savings. You've obviously been making that payment now for how many years, where you've been budgeting and you've been used to that payment. Do something with the savings first. Don't go all the way back down to kind of the lower payment, save the $500, $600 a month. Take some of that and get it into savings, because you're already used to spending it. Maybe increase your 401 contribution at work, so you just have your paycheck, already take that out. Or set up a separate account, it's even better, and draft it out there while you're doing it. That way you're just getting ahead of the ball game instead of just lowering your payment, and then 5 years from now you're back up to the same number of debts and credit cards and car loans and all that kind of stuff with nothing to show for it, and you're just in this refi cycle. So that's really one of my better tips is just make sure that if you are saving $300 or $400, just take $200 out of there, whatever was the car payment, and still make the payment, so to speak, but get it into retirement, savings, emergency fund somewhere, because you're already used to making that payment, and you'll be way ahead of the ball game in 4 or 5, 10 years. So I hope you found this video interesting and helpful. Please click and subscribe, all that YouTube stuff, and comment or have questions. If I get enough questions, I can put a whole video together just on user questions and subscriber questions. And then if there's anything really deep dive, that's the next couple of videos I want to work on. So I have a how-do series, like how do credit reports work, how do income work. And so I really want to work on that next couple of videos of just more of a deep dive into a specific topic. So hope you enjoyed the video. If you need any help with a mortgage loan to purchase or refinance a home in Utah or Nevada, check out my website at ryanbolton.com, and I hope you're having a wonderful day, and see you next time.